Ladies and gentlemen, good day and welcome to Sahyadri Industries Limited Q3 FY23 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Tuljaram Maheshwari, CEO, CFO and whole-time director. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us on Sahyadri Limited Q3 FY23 earnings conference call. I hope everyone has had a chance to view our financial results and investor presentation, which were presently posted on the company's website and stock exchange. I am accompanied by Mr. Arvind Garg, our Financial Controller, and SGA, our Investor Relation Advisor on this call today. As per the study published by Molder Intelligence, the global fiber cement market is expected to be 34,940 kilotons in 2022, rising to 42,984 kilotons by 2027. Registering a CAGR 4.23% during this period. As we all know, the Indian government has launched Housing for All, which will be a game changer. The goal for this initiative is to construct housing that is more reasonably priced, which will give the housing construction industry a sizable boost. As a result, it will provide numerous opportunities for the country fiber cement market to grow in the coming years. Furthermore, this product, lightweight, long-lasting, along with being resistant to fire, water, and termites. Fiber cement products are preferred by middle-class families worldwide since they are easy to install and are low maintenance, long-lasting, and cost-effective. The growing middle-class population, combined with rising disposable incomes, has aided in the growth of middle-class housing segment. As a result, the use of fiber cement is expected to rise. This product is also used to cover the outside of a variety of buildings, including hotels, school, office buildings, retail centers, hospitals, and corporate centers. Overall, with such great applications and lower cost with ongoing and upcoming construction projects, the construction sector will benefit, generating significant market demand. Now moving to the performance during the quarter. During the quarter, we witnessed a slowdown in demand for roofing services, particularly in rural parts of India. The raw material costs are at elevated levels on the back of inflationary trend prevailing in the economy. However, we have been able to pass on the partial increase in cost to our customers. The stabilization of operations at the Perundurai plant resulted in increased expenditure, which impacted the bottom line. For 9 months FY23, our capacity utilization was 66%, with flat sheet product having a high capacity utilization than roofing products. However, roofing products utilization was impacted due to sluggish demand in the rural market. Now I move to CapEx update. Our capacity expansion in Maharashtra state for manufacturing of non-asbestos cement boards, plant having capacity of 72,000 metric ton, have been initiated. Land has been identified and land acquisition is in process. Also, company is in process of setting up new unit in Odisha state for manufacturing asbestos corrugated sheet of 1,20,000 metric ton. Before we discuss regarding the financial performance, the company has declared an interim dividend for rupees 2.5 per equity share of the face value of 10 each for FY23. Q3 FY23 performance. Consolidated total income stood at rupees 123.7 crore in Q3 FY23 as compared to 111.2 crore in Q3 FY22. EBITDA of the company stood at 16.2 crore in Q3 FY23 as compared to 15.3 crore in Q3 FY22. PAT for the quarter stood at rupees 4.7 crore. 9 months FY23 performance. Consolidated total income stood at rupees 429.5 crore in 9 months FY23 as compared to 413.5 crore in 9 months FY22. EBITDA of company stood at rupees 69 crore in Q9 FY23. PAT for the quarter stood at rupees 32.4 crore. We at Sahyadri are committed towards the goal of becoming a pan-India player, which means that we will continue to explore new markets, increase our market penetration, improve our potential, efficiency and produce more value-added products. Thank you. Now I open the floor for questions and answers.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anjana Shah from Shah Investments. Kindly proceed.
Thank you for this opportunity, sir. A couple of questions from my end. Sir, to begin with, our capacity utilization for 9 months FY23 stood at 66%. So, sir, what kind of steps are we taking to improve our capacity utilization? And, sir, also, what would this number be for Q3 FY23?
See, as I mentioned in my presentation that these 3 quarters have been impacted badly on account of sluggish demand, and generally the Q4 is better quarter of the year compared to other Q2 and Q3 quarter. So hopefully this capacity utilization will go to around 77 to 80%.
So, is there any contribution from our new plant that has led to some improvement in Q4?
It's already started giving the contribution.
Right.
Still, certain teething issues are there. So we didn't reach to that capacity. At present, we are working at 50% capacity, which will improve in the Q4.
So you're confident that by Q4 we should reach approximately 70%. Is my understanding correct?
Yeah.
Okay, sure. And so we've mentioned in our press release that our EBITDA has been impacted due to overhead expenses at the Perundurai plant.
Yes.
So what is the quantum of the same?
See, the quantum would be around 1.5 to 2 crore rupees.
Right. And so how are we working towards improving our other overhead costs?
That is ongoing process, madam.
Okay. Sure, sir. That was really helpful. Thank you so much for this opportunity.
Thanks.
Thank you. The next question is from the line of Hema Kotari from SK Consultancy. Kindly proceed. As there is no response, we'll go on to the next question. The next question is from the line of Abhishek Dave from Bright Securities. Kindly proceed.
Hi, am I audible?
Yes.
Yes, yes. Please go ahead.
Thank you for the opportunity. I have two questions. One is on how do you see ocean freight rates going on?
Okay.
And the other is, during the last conference call, we have stated we will be doing revenue around 575 to 600 crore. Are we on track, or do we see some kind of headwind?
See, ocean cost started reducing, okay, and there would be a positive impact coming into the Q4. As regards the total the overall revenue, we are in that line of 575, 600.
Okay, sir. Thank you. I'll join the queue again.
Thank you.
Thank you. The next question is from the line of Riya Verma from NR Securities. Kindly proceed.
Hi, sir. Thank you for the opportunity. Sir, two questions. Firstly, what is the share of export for Q3 and 9 months?
Okay. What is the second one?
And secondly, sir, we have around 3,000 dealers. So are we planning to increase the same?
Okay. So, if you see the export percentage is around 14% of the total sale in 3 months, and 9 months is around 12%. But mainly, if you see, the export is for, a flat sheet product. So that if you see the total sale of a flat sheet, it is around 50%. That means 50% we sell domestic and 50% outside. As regard the dealer increasing, that's ongoing, because for capacity utilization and for everything, it's an ongoing process, and we have to work towards that.
And sir, do we have any exclusive dealers?
We have exclusive dealers. Yeah.
Okay, fine. Thank you, sir.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Kindly proceed.
Yeah, नमस्कार सर.
नमस्कार, कैसे हैं?
बढ़िया सर जी. आप लोग कैसे हैं? How are you?
ये बताइए.
जी सर जी. Sir, all well here, sir. Firstly, sir, when we look at the 9-month number, we posted turnover of 423. If we even out the seasonality and a likewise comparison, the top line growth is there, but the bottom line has taken a hit because of the reasons explained by you. So on the volume terms, how are we shaping up for the 9 months? What was the 9 months utilization level for 21 and vis-a-vis this year?
As I mentioned, it is a 60%, 66% the capacity utilization for the 9 months.
This is for this year. Last year क्या था sir?
Last year was 79%.
Okay.
Last year was 79%, but this year the figure is changing because the new capacity has come.
Okay. So if we keep aside the new capacity in South and likewise comparison with last year, how have the utilization levels been?
It would be around 71% for this year, and then last year was 79%.
Okay. So sir, lowering of 10% in the volume is because of this tepid demand, which you have already mentioned in your release. So what are the factors that has led to this lower offtake? If you could dwell more into it.
See, if you see, generally, the Q1 is always one of the best quarter of this industry, and that is impacted very badly this year because of continuous monsoon. Monsoon continues till 20th June or something. So generally the demand which starts from the month of May and 15th May, that is impacted because monsoon continues till, if you have seen, till October there was a monsoon. So that first quarter lower volume has given an impact on, the capacity utilization for overall.
So the monsoon commences sometimes in the month of May, first week of May.
It continues till October.
Yeah. So,
generally, you know, the first quarter is always good.
okay.
But continuous monsoon doesn't give a chance to the people to renovate their houses or build the houses.
Okay. So that would have been a postponing of the demand. But here there is a demand destruction.
It is generally not a postponing. Generally, they do, before the harvesting, they do the construction.
Okay.
So that's the trend of this industry. It's not you and me can do this, anything on this.
So the dependence again would be how the monsoon spread the next year. Then the factors would be playing out in the similar pattern.
Monsoon is definitely one of the factors, because our industry depends on, if you see 80% capacity, the roofing business is for the rural economy. And if rural economy doesn't work well because of whatever XYZ reason, definitely there would be impact. But considering the push by Government of India on the rural economy, earlier the dependability or the impact of the monsoon was much more. Now, if the monsoon is not there, then government start giving a lot of incentives or those things. So the impact is not, but we cannot ignore the monsoon.
As the allocation for affordable housing has gone up, and also the commitment from the government, housing for all scheme. So what kind of trust does these schemes have on the improving of the utilization levels going ahead?
Because as a cycle, generally, into 4 and 5 years, 1 year come where, the demand goes low. That's what the cycle which is impacted in the first quarter. We hope that this year should be good, because the trend what now we are seeing in the Q4 appears to be encouraging, but you don't know how the things would be and how the geopolitical situation and environment would be.
Right. Sir, if you could give us some color on the raw material basket, sir. I think so a major part of that swing has also come. Firstly, you did mention about ocean freight part. So I think so that would be included in the other expenses and cost of raw material consumed. So in both these cases, there have been a significant upward trend. So if you could give us some more color on the same.
See, there are two impacts. One is, the forex fluctuation. See, when we started the year, I think dollar was 76 or so, which reached to 80, 82. So that is a straight-way impact of 8 to 9%. Second is, because of this Ukraine war, there is an impact of, the increase in the particularly asbestos fiber pricing. So total out around 15-16%. However, just for your information, we would able to pass to the market around 60 to 70% whatever the cost increase.
Right. Sir, on the forex front, just to dwell on the same, it is, I think, then we are unhedged about that, or it is the inflation, the dollar-denominated imports that are affecting?
We don't hedge it. It is unhedged always. We don't believe into that.
Okay, so it is a dollar-denominated import. That is the reason the prices goes up and.
Correct.
Right, sir, even on the finance cost front, it is only because of the new unit that the finance cost has.
One is the new unit. Second is, earlier the fiber is being given against LC. Now, one, because of this uncertainties and those things, so we increase our, month holding from 3 to 6 months. And second is, we have to pay advance, and that advance also remain with them for minimum 30 to 60 days, resulting your working capital is put on that extra. This thing is around 100 crore. So whatever the cost you are seeing today on the interest and etc., that is mainly that factor, other than the new unit.
So what has been our working capital requirement, sir, in absolute number?
See, generally working capital requirement is around 60 to 70 crore.
Oh, 60 to 70.
Such type of
Yeah.
things gives the more.
Come again, sir. Sachai?
Generally, the working capital requirement is 60 to 70 crore, but this fiber and those things that make working capital requirement more.
So that has gone up to, sir, what levels now because of these factors of
We are
longer?
still managing with 60, 70
Okay.
because we had a investment in those things. So we are still managing with that. Had that would not have been a situation, we would have a surplus.
Okay. Sir, 2-3 points, sir. Firstly, on the raw material front, sir, other than in all commodities, whether it is crude or other, whether metals or chemicals, gases, everywhere there has been an even out in the prices. Whatever the high they have touched, they have corrected not only to the previous level, even if we can take previously to the Ukraine war level, but even lower than that. So how are the dynamics working for the fiber prices, sir, and what factors are actually keeping them higher, and what's the outlook, sir, going ahead?
The fiber, they have monopoly. There are only two suppliers. So you don't have choice much. Whatever they say, we have to take it. However, they reduce the prices by 4 to 5% for the next year.
Okay. So we have a long-term contract, sir, in that case?
Not a long-term contract, it's a yearly basis.
Yearly contract with them?
Yes.
So for the next year, it is for the calendar year that the prices have been fixed for the entire offtake?
5% it is lower than the last year, but if forex fluctuation would be around 4 to 5%, then you will be zero.
It will get mitigated. And how will this ocean freight affect us, sir?
Ocean freight, because they don't give us, they give us CIF. So if there is any reduction or increase, they bear it and they make it part of the pricing.
Okay, so we won't be benefiting from the same?
No.
Okay, but only in our exports. So what portion of our sales in the
export also we are not doing now CIF, we are doing FOB, because last time we have seen very, the steep increase in the sea freight and which is impacted badly. So now we are going only on FOB. We are selling only on FOB.
Okay. Sir, as we have seen
fluctuation on sea freight.
Correct. But sir, since the currency fluctuation is a part and parcel of our business model, so the cost of hedging is higher than the rupee depreciation on a historical basis?
We have seen few examples it's like that, and as a management policy we don't go into the hedging those things.
Okay. And now coming to the capex part, sir, we have outlined our capex in your release also and again in the presentation. So taking into account the current environment and the type of the dynamics of the industry, so what should be the timeline by which, sir, for both Odisha and Maharashtra we will be going ahead, and how are we going to fund?
24-25. Odisha would be, because still land identification is going on. Because as you know, nowadays, land acquisition is not that easy.
Correct.
So first would be that should be in place in, say, fourth quarter of 25th. That means last quarter of 24-25.
Okay. And sir, if we differentiate between the product mix, like the asbestos corrugated sheet and the non-asbestos cement board, the end user are the same, or the end use customer are the same people? What are the key differentiations, sir, between the two?
Different.
Okay, could you explain, throw some more light, sir? What is the key differentiation between the two products?
See, the roofing is being used for the roofing, and that's the usual. And this non-asbestos is, as if you've seen my explanation in my last Concall, this is a straight replacement of plywood and board. And in this presentation also I mentioned, based on that report, everywhere now that demand is increasing. So I feel that is going to be a product for future.
Okay. So when we mention flat sheets are the same non-asbestos cement board?
Yes, same.
Correct. You also mentioned about value-added products in the case. So which one classify for value-added products, sir?
Flat sheet means there is a value-added product like when planks, panels, those things.
Okay, and these are comparable to the false ceilings also, sir, that we have?
Yes. Our product goes to false ceiling also. Because if you use a gypsum false ceiling, there's a lot of negative, after the moisture that gets fall on the people who are living, and you would have been noticed that a lot of accident happens. In our product, this doesn't happen.
Right, sir. Sir, even on their part, if you could throw some light on this Poonam roofing merger.
That is already done.
Yeah, it is already done. I just wanted to understand the rationale of the same. What are the key benefits we will be deriving from the...
It's now old matter, my dear. It's already there in the
annual report.
Scheme and already done and completed now.
So how are we benefiting from it, sir? If you could
we got the land, we got the workers, we got the machineries, everything which is being used for value-added product. That's what we have mentioned in our scheme and starting getting those things.
Correct, sir. Right, sir. Sir, I just joined the queue again.
Thank you.
Thank you for the elaborate answers.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Aditya Sen from Robo Capital. Kindly proceed.
Yeah, good evening, sir.
Good evening. How are you?
All good.
Yeah.
I have this question on the exports. You just said that 50% of our flagship products go into the exports. So is it because the demand in India is less? And if yes, then how are we expecting this demand to shape up in the future? And also, do we get higher realization on the same products in the export market?
See, it's not that we are not supplying to the domestic and we are giving to the export. We have to create the market for new projects which are coming. So we have to balance between two.
Okay.
Coming to point number 2 is on the pricing front. There is a plus and minus around 2 to 3%. Sometimes we get in domestic both or sometimes we get in export both.
Okay, sir, got it. And the next one is regarding the Chennai's facility, new facility that we have. Are we expecting more than 50% utilization for the next year, that is FY24?
FY24, 25, yes.
Plus 50% utilization, right?
Yeah, more than 50%, yeah.
Okay. And regarding the margins, last time we got a guidance that it should be around 18-19% levels. So are we sticking to this or shall we revise this down?
Can you repeat your question? I didn't get your question.
Last quarter you guided that margins should be around 18 to 19% levels.
I have not said that. What I said is we'll try to work on that, but that all depends on geopolitical situation and that. That's what I mentioned in my last call. I have not said specifically that would be the margin percentage.
Yeah, right. That's an aspirational target.
So you are putting your thought in my mouth.
Pardon, sir?
You are putting your thought in my mouth.
No, it wasn't exactly like that, but yeah, it sounded. So, shall we expect this aspiration to remain the same for now?
See, the point is, there is an increase in cost. Definitely, there is an endeavor to pass on to the market, and market has to take it. So, that's a continuous process to improve the margins. So, I don't say any numbers, but that's an ongoing process, and we will continue to do that.
Right. Thank you, sir. I got my answers. Thanks a lot.
Thank you. As a reminder to participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Pankaj Jain from Mahavir Investments. Kindly proceed.
Hi, sir. Thank you for the opportunity. Sir, a couple of questions from my end. Can you please share the revenue mix of asbestos and non-asbestos for Q3 and 9 months of FY23?
It's more or less same, 78:22.
for both Q3 and 9 months?
I think this 3 months, it is a little change to 74 versus 26.
Okay. And sir, on the financial front, sir, what would be the power and fuel cost as a percentage of sales?
Power and fuel is hardly, because here that percentage is very less comparatively. Very less.
Okay, single digit?
Here the main cost is the fiber.
Okay. And sir, lastly, on the domestic roofing front, volumes are a little lower. So what has led to this reduction of volume front, and how do you see the demand panning out in the current quarter?
I already said that, but again for your satisfaction, there is a sluggish demand till 9 months, and hopefully Q4 and next year Q1 should give the better this thing.
Okay. Thanks a lot, sir. I'll join the queue.
Thank you.
Thank you. Participants, if you wish to ask a question, please press star 1. To ask a question, you may press star 1 on your touchtone telephone. The next question is from the line of Dipti Kothari from Kothari Securities. Kindly proceed.
Good evening, sir.
Good evening.
So, sir, thank you for the opportunity. So my question was that what is the current status of the manufacturing plant?
Odisha manufacturing or land identification work is going on.
Okay, and sir, Maharashtra unit?
Maharashtra land identification is happened. Acquisition is going on.
Okay, sir. And have we incurred any capex towards the same in Q3?
Yes, for Maharashtra we have incurred the cost.
Okay, so what will be the cost, sir?
It is around 22 crore we have already spent.
Okay, sir. Thank you. That is it from my side.
Thank you. Participants, if you wish to ask a question, please press star 1. The next question is from the line of Saket Kapoor from Kapoor Company. Kindly proceed.
Yes, sir. Sir, how going to fund the capex going forward? What kind of debt level? And currently, sir, what is the debt level on the book, sir?
At present, it is 0.4%.
Didn't get you, sir. 0.4%?
0.4:1.
0.4. And in absolute number, sir?
Absolute number, I don't have at present, would be given.
Okay, sir. And going forward, sir, how will the mix be? How are we going to fund the project, the remaining for Maharashtra, and as and when the Odisha project undergoes?
See, the endeavor would be to fund minimum from the internal accruals, but whatever is left over, we have to take a loan. However, for your information, we have tied up the loan for the Maharashtra project.
Okay, sir. And we have already spent this 22 crore. Factoring this, we have a debt equity ratio of 0.4:1.
22 crore we have spent for internal accruals. We have not taken any loan so far.
Okay, we have not drawn anything as of.
Yes.
Okay, and we have tied up for the funds as and when the need required.
We tied up the fund because whenever the requirement would be, that would be given.
Okay. And what have been the cost of funds, sir? At what rates have we?
That is fluctuating. It is an MCLR link. Tomorrow there would be again increase in the IBI, then it will be increased. So there's no much meaning on that.
Correct, sir. Sir, as you mentioned that the 9 months there was a sluggish demand and the factors because of which we have reported lower numbers. So if you could give us some color on how the sentiments of business have been for the month of January. Is it in line with what we were expecting, or still the sluggishness or what we posted, what we have seen in December quarter is still continuing as of now?
It's better than December.
Okay. As per the anticipation, sir? Because for fourth and the first quarter are the one where we see the maximum business outlook.
As per the anticipation.
Right, sir. Sir, about this other expenditure part, I just mixed up the numbers. So for 9 months, the other expenditure is 114 crore versus 95 crore. So the factors that contributed to this is the only the shipping freight cost that is there, or what?
Shipping freight. Shipping freight, and also we are going for the brand building and the marketing activities, particularly in the south region.
What have you budgeted, sir, in terms for the marketing expenses?
We budgeted 6 crore, but looking to the results, we have curtailed to the 5 crore.
Okay. So 5 crore is the annual budget for FY23.
Yes.
Right, sir. And one second. No, I'll join again, sir. I just missed the point.
Okay.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Maheshwari for closing comments.
Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. However, if you need any further clarification or want to know more about the company, please contact our SGA team or investor relations advisors. Thank you once again for taking the time to join us on the call. Thank you.
Thank you. On behalf of Sahyadri Industries Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.